body politic. Join us after the news.
After the news, there's a primetime special on the findings of the Duns Payment Tribunal, followed by Wings at 10:35, debate on Davis at 11, and the Art Files is at 11:45, with the late news at 12:15. But now it's time for the news, read by Angie Mazzetti.
McCracken report finds Charles Haughey's evidence unbelievable and recommends documents to the DPP. Report suggests serious sanctions against former Minister Michael Lowry for tax evasion. Michelle de Bruin brings home gold and silver from Seville. Minister McDade says no snub intended. And the long wait for CAO results is over, but the hunt for accommodation is just beginning. Good evening. The government has given an undertaking that it will be studying the report of the Duns Payments to Politicians Tribunal with a view to implementing its findings as quickly as possible. Mr Justice Brian McCracken concluded that the evidence of Charles Haughey was, in his words, unbelievable, that the former Taoiseach's attitude to the tribunal could have amounted to a criminal offence. Mr Haughey could face prosecution as a result. The report recommends that the documents be sent to the Director of Public Prosecutions. Dealing with payments made to the former Minister Michael Lowry, the report suggests that serious sanctions should be imposed on Mr Lowry for tax evasion. It describes as appalling a situation where a government minister could be seen to have been consistently benefiting from the black economy. Mr Justice Brian McCracken also concluded that there was no evidence of any political favours being asked for or given in return for the payments to the two men. In a statement this afternoon, Mr Lowry said he wouldn't comment on the report, but he noted that there was no political impropriety on his part. The Taoiseach said some of the findings were deeply dismaying.
After giving his evidence for 2 hours at the McCracken Tribunal in the middle of July, the former Taoiseach Charles Haughey made a grand exit from Dublin Castle. Now, almost 5 weeks on, the Tribunal inquiry report has delivered a damning judgment on the former Fianna Fáil Taoiseach. In a strongly worded criticism of Charles Haughey, Mr Justice Brian McCracken's report says the tribunal has been unable to accept much of his evidence, especially his assertion that he was at no time aware that monies were held for his benefit in the now famous Ansbacher deposits. The tribunal says it cannot believe that Mr Charles Haughey was not aware of the taxation implications of the receipt of gifts of this magnitude from Ben Dunn, but rather believes that Mr Haughey deliberately shrouded the gifts in secrecy and allowed the money to be kept offshore in an attempt to make sure the revenue authorities would never know of the gifts. The report says it is quite unacceptable that a Taoiseach or Cabinet Minister should be supported in his personal lifestyle by gifts made to him personally. Mr Justice Brian McCracken says there appears to be no political impropriety on the part of Mr Haughey in relation to these gifts, but that does not take away from the unacceptable nature of them. But perhaps the most damning section of all for Mr Haughey comes in the final paragraph of the summary of conclusions. It says the attitude of Mr Haughey in relation to the tribunal has been such as might amount to an offence under the Tribunals of Inquiry Act. It says that all relevant papers will be sent to the Director of Public Prosecutions for his consideration and decision as to whether Mr Haughey should be prosecuted. When this tribunal was originally set up, its main focus of attention was the former Fine Gael Minister Michael Lowry. Now, 7 months on, it has delivered a damning indictment of Charles Haughey, one of the most controversial figures in Irish politics for over 30 years. Here at Charles Haughey's Kinseely home, this evening the gates have remained firmly shut to the media, and there's been no comment from the man himself. When Mr Haughey retired as Taoiseach, he said he wanted to leave public life behind him. But given what's happened today, he's now very firmly back in the public gaze. And as a result of the fallout from this tribunal report, Mr Haughey faces the possibility, at least, of a fine of up to £10,000 and/or 2 years in jail. And there could also be more bad news for the former Fianna Fáil Taoiseach, the prospects of another inquiry, this time into his affairs.
Mr Justice McCracken's report said serious sanctions should be imposed for tax evasion on the former Fine Gael Minister Michael Lowry. It also recommends tougher penalties for politicians who breach rules for disclosing contributions.
Former Minister Michael Lowry can take some comfort from the report's conclusion that no political favours were sought or given in return for payments to him, but the rest of it makes uncomfortable reading. It concludes that cheques for over £160,000 made out to Streamline, which Mr Lowry cashed or put into his own account, were not, as he claimed, bonus payments, but were for the company. Bonus payments of over £150,000, some routed through offshore accounts, as well as the payment of nearly £400,000 for work on his house, were designed to help him evade tax. And Mr Justice McCracken concludes that if such a person can behave in this way without serious sanctions being imposed, it becomes very difficult to condemn others who similarly flout the law. Dealing with former supermarket boss Ben Dunn, whose payments led to the establishment of the tribunal, the report says that he solely controlled accounts out of which most of the payments were made, but that this individual control in one of the country's largest commercial enterprises was certainly strange, and that the board is to some extent responsible for the actions of the managing director, and that the company must bear some blame for not having proper supervision. While Mr Dunn is impetuously generous, this doesn't explain the Haughey payments, which may have been made to buy the friendship, or at least the acquaintance, of a person in a very powerful political position. Mr Haughey's son Kieran, who runs Celtic Helicopters, gave evidence about a £10,000 payment from Ben Dunn. The report rejects his claim that this was for consultancy work. In fact, it was a bonus payment. The judge also says Kieran Haughey must have been aware that a loan to his company of £150,000 was paid off using money from the Ansbacher deposits. Other recipients of payments from Ben Dunn will be pleased that the report says they were normal political contributions with no further motive. But Mr Justice McCracken does recommend that in future Dáil and Shannon candidates should have to produce a tax clearance certificate, while failure to make full disclosures of donations should be a criminal offence, with offenders disqualified from membership of the Oireachtas. With the production of today's report, Mr Justice Brian McCracken has more or less finished the job given to him by the Dáil. Indeed, by establishing the link between Charles Haughey and the Dunn payments, the tribunal has exceeded